London Mines and Money 2017, ladies and gentlemen, and now we move on with Cobalt and Cobalt 27, the company here of Anthony Milewski, who is the chairman, and we want to get an insight. Anthony, welcome.
Hey, thanks for having me.
Yeah, great that you are here. Cobalt, I mean, Cobalt is one of the top ingredients for the e-mobility in the future, for sure, to make the cathode. And Cobalt 27, what's the company doing exactly?
You know, what we're really doing is trying to give investors access to the electric vehicle story.
Yeah.
You know, when we often have investors come in, they say, like, we don't know if Tesla's going to be the winner, if Ford's going to be the winner in this race to sell electric vehicles. But what we do know is if there's going to be a winner, the basic materials are going to be winners.
Definitely. Yeah, because otherwise you cannot build a battery.
Exactly. so we're really just a play. We're a proxy for that growth and for that demand.
Yeah, that's right. So you are, can we say that you are like a Cobalt ETF?
I mean, we look a little bit like that today. I mean, Uranium Participation Corp would be an analogous company.
Yeah.
However, we have one really critical difference, which is our focus going forward is streaming and royalties. And so we're kind of like old meets new. So we're taking Silver Wheaton and combining it with Uranium Participation Corp to create Cobalt 27.
Well, that's a great idea, we'd call it. Fantastic. So you are buying physical cobalt, of course, and you are storing that. So first question, how do you buy it? From whom do you buy it, and where do you store it?
So we bought most of the cobalt during the IPO, and that really took a couple years to put together. We bought it from funds, traders, producers. We stored it in LME bonded warehouses, fully insured for more than the value of the cobalt, and that's in Baltimore, Antwerp, and Rotterdam. But really going forward, to get the market cap and liquidity that our investors want, you know, we need to do large streaming transactions or large cobalt purchases, and so our real focus here is to add market cap and liquidity to the company.
When you say, okay, let's put it that way, the physical component totally understood and agreed, and I'm pretty sure you want to be in the future also like a deliverer or supplier maybe to the battery industry when cobalt is at $100,000 a ton?
Yeah, that wouldn't be a bad thing, would it? No, look, I mean, you know, the streams that we anticipate initially doing are financially settled. And that's really a function of just giving producers the flexibility that they really need, which is to say that, you know, a lot of these producers, they have entire marketing groups, and you're not trying to go in there and take the production. Quite to the contrary, you're trying to provide capital on one side of the balance sheet that benefits another side of the balance sheet. You know, in the overwhelming majority of cases, these are not cobalt producers. They're copper producers and nickel producers. And so the cobalt is really an afterthought. And so when you're approaching a producing company, you really want to be as amenable to their situation as possible.
Okay, I see. Great. Let's come to the, let's say, royalty and streaming business. How does that work? How do you doing it? Or let's put it that way, how looks a typical deal for you? Sure.
I mean, there are no typical deals, but what I would say is the royalties today that we own are really kind of out-of-the-money options on the future. They are, you know, kind of a couple % here or there, depending on which one, with the right to convert into a stream should it ever go into production. And so that's the royalty basket. I would say on the go-forward basis, the big transactions we're talking about are with large producers, and that would really just be taking a fraction of their production and financially settling it over the course of decades.
Okay, fantastic. So let's assume you have done a lot of royalty, a lot of streaming deals, the cobalt is flooding into you, or is it only cash also? But you want to have the physical material, right?
Well, on the streaming side, you actually would allow those units to continue to be sold, right? Yeah. I mean, look, it's our desire and view that cobalt is critical for batteries, not just today and tomorrow, but for decades to come. And so the idea is not to kind of hold all the cobalt. Instead, it's to give the investor leverage to the move in cobalt price and to the adoption of the electric vehicle. And so by financially settling these contracts in the future, the underlying shareholder benefits from the move in cobalt price. We make more money when cobalt goes up, because one, our cobalt that we have will be marked higher, and two, any producing streams that we have in the future will also make more money.
Okay, I see. Fantastic. And so maybe you want to pay then for the future also dividends?
Yeah, look, it's our intention that we will do special dividends. You know, I don't want to hold a huge amount of cash on my balance sheet. Instead, what I would foresee is really giving a material portion of free cash flow back to shareholders on a very regular basis. You know, I think we would have one of the highest dividend yields in the business because, like, ultimately the portfolio manager, the individual investor, it's their job to allocate capital, not mine. And so we want to really have this model where we give back the cash and allow investors to allocate capital versus ourselves.
Yeah, fantastic. So what does the company look like today? How many shares you have outstanding? You are traded in Toronto, right?
Yeah.
And what is cash in the bank?
So we have, a market cap of around 250 million Canadian.
Nice.
Our share price is about $10.15. We have $15 million of cash in the bank, Canadian. And, we're sitting there looking at the world and thinking about how we're going to be able to execute on a stream.
Fantastic, I love that. Great. Well, Anthony, thank you very much for that. And we look forward, latest PDAC, we see us. And then I want to do an execution interview.
All right, thank you very much. Thanks for having me.
Thank you very much.
Cheers.
Great. Yeah, ladies and gentlemen, it was Anthony Milewski, the chairman of Cobalt 27. And you heard it. This is something like a new structure company, not new structure, but new structure in the company, because it's a mixture out of an ETF and a royalty streaming company, which I personally think is a fantastic combination to do shareholder value and also for the future. And as Anthony pointed it out very, very nicely, we don't know who is the next big winner in this, let's say, lithium e-mobility Cobalt game. But when you have Cobalt and we have streaming agreements and you make money out of that, then it doesn't matter who wins the next thing, because one thing is for sure, e-mobility is an unstoppable trend and we get more and more cars on the road. So Cobalt 27 is positioned to do the right thing here. Check it out. Thanks for watching us and bye-bye from London.
Thank you.